I'm going to show you a dividend investing strategy that can generate you $30,000 a year in passive income. And yes, it's going to be very expensive. A lot of people always say dividend investing or just investing in general is only for the rich, but they're wrong. Investing is how you get rich. It's not just for the wealthy. My name is Kenneth and I teach my nearly 300,000 social media followers how to invest. So if that sounds interesting to you, smash that follow. And remember, you're about to see some pretty large numbers here. And I know at first your impulse decision is going to be to rush to the comments and say, no one can afford this. But don't neglect the benefit of long-term investing, staying consistent and adding to a position for years and decades and decades. It is attainable. You just have to be consistent. In this video, we're going to be going over how to make $30,000 from 3 separate investments, $10,000 in each. Let me know in the comments below if you want, and I will happily make this video again with slightly lower numbers. Maybe we can do $1,000 per investment. And remember, this is just one example out of many. You definitely don't want to neglect something boring like an S&P 500 index fund. That should still be a large part of your portfolio. Now, I've picked 3 investments here: a dividend ETF, a real estate investment trust, and a covered call ETF. These are just examples. There are many other funds that do the exact same thing. These are just 3 that I've picked. It is not financial advice. And before you whine in the comments on, oh, you didn't pick the one I like, why didn't you pick the one I like? I promise you, I've probably talked about it. I've made 5,000 videos in 4 years. I've talked about what you like. Check my playlists. It's probably there. The first one we're going to look at is SPHD. It has a monthly dividend, and you can see here that it has an expense ratio of 0.30%. The second investment we're going to look at is Realty Income. It is largely viewed as the most popular real estate investment trust on the market. The third one we're going to look at is JEPQ, a covered call ETF that also has an expense ratio of 0.35%. Your goal is to make $10,000 from each one of these investments. So I have here how many shares you're going to need and how much it's going to cost you to buy each one. And like I said at the beginning, yes, it's going to be expensive. Your grand total is just under $500,000. And before you rush to the comments to say this is unattainable for the average American, that is not true. As long as you start small, stay consistent, and reinvest your dividends through something called DRIP, Dividend Reinvestment Plan, it is attainable. If you want to see what it looks like to start really small with earning just $100 a year from their dividends, I'm happy to make a video for that. And if you want to see something on $1,000 from each one of these per year, I'm happy to make that one too. Let me know in the comments, smash that follow. So in the last video, we were talking about how to make $30,000 per year from 3 investments. And I knew what the comments were going to be. This isn't attainable. No one can afford this. It's unrealistic. And I get it. Although I disagree, I think it is attainable. I think everyone can do it as long as you start small, stay consistent, blah, blah, blah. Anytime I make one of these videos, people rush to the comments, tell me it's not attainable and I should make something more realistic. When I make videos that are more realistic, people go, how is this really supposed to help me? This is such a small amount. There's no winning, but I like to torture myself, so here it is. We are going to take the exact 3 same investments and we're going to look at how to make $100 per year from the dividends instead of $10,000 a year from the dividends. You ready? Let's go. Ooh, first, smash that follow. The first investment we're looking at is SPHD. It's a monthly dividend payer, and it has an expense ratio of 0.30%. The second one is a real estate investment trust, and it has no expense ratio. And the third one we're looking at is JEPQ, a covered call ETF that has an expense ratio of 0.35%. In order to make $100 per year from each one of these companies' dividends, I've broken down how many shares you're going to need. So it's 52 shares, 32 shares, and 20 shares. And it is going to cost you just under $5,000. Remember, the whole thing about investing is that it's a long game. It takes time. You start with a little and it compounds and builds over time and years and decades and decades. So this might not look like a lot today, but I promise you, if you start small and stay consistent, it can become a very large amount in the future. And I already know how some people are going to respond in the comments. Wouldn't this one be better? Or why didn't you mention that one? This one has a much better dividend or much lower fees, or you should have talked about. I have been on TikTok for 5 years. I've talked about it. Check the playlists. I promise you the stock or ETF you're asking about has been talked about. Thanks for watching. Smash the follow. Investing is a long game. It takes time, consistency, and a hell of a lot of patience. A lot of people will start off looking at the stock market going, This is only for the wealthy. I can't afford this. And then when you show them, hey, here's how much it takes to make just a little bit, they say, well, this doesn't help me. It's such a small amount. There really is no winning. In the first video on the series I made, we went over how to make $30,000 a year from 3 dividend ETFs or stocks. In the second video I did, it was $100 from each one of these, so for $300 per year. This one is going to be $1,000 from each of these. And I know it's a big number and it looks like it's a lot. But don't stress yourself out and don't play this head game of investing is only for the wealthy. Since I can't afford to do it, I'll just never do it. Go watch the last video, which is going to be pinned in the description below. It's how to make $100. Remember, you got to start small. But this shows you, if you start small, you can move to medium and then heavy down the road. And remember, I'm picking 3 investments out of thousands. You don't have to whine in the comments and go, you didn't talk about the one that I like. Why didn't you mention the one that I like? I've been on TikTok for 5 years. I've made 5,000 videos. I promise you the stock you like is covered in a playlist or 2 on this app. All right, you ready? Let's go take a look on how much it's going to cost you to make $1,000 per year from these 3 dividend-focused investments. So we've got 3 investments that pay dividends. SPHD is a monthly dividend ETF, O is a real estate investment trust, and JEPQ is a covered call ETF. Check the covered call playlist. If you're not sure what it is, you need to understand the risks before you get involved, of which there are some risks. Anyway, to make $1,000 per year from each of these investments, I've broken it down how many shares you will need. So SPHD is 523, O is 324, and JEPQ is 204. And the total to make $1,000 or $3,000 per year is going to cost you just under $49,000. And for the people saying, hey, can you do this but for $500? No, you can do it. Just cut these numbers in half. Thanks for watching. Smash that follow.